Now, cues to watch in markets in the week ahead. Risks and opportunities in markets tension in West Asia keep investors on edge. Indian stocks in the slow lane. Crude oil posts best week of 2024. And so for more on this, we're also being joined by Mithali Nikor, economist in New Delhi. She's joining us from New Delhi. Thank you so much for joining us this morning. Let's begin by asking you, where do you think markets will recover quickly from the shocks of what's happening in West Asia?
So I think at this point in time, the situation, if we look at, the global market is very interesting. So you started off with talking about the jobs report. I'd also like to point out, if we look at the net jobs added in the US economy, that's a number that none of us were really expecting. In fact, if we look at the cues given by the Fed, even the Fed was not expecting that the US economy would add over 250,000 jobs in the last quarter. And the kind of job numbers that have come out in September have really, caught everyone by a pleasant surprise. Inflation is also getting tamed in the US markets. So this obviously signals a flight of capital and a flight of, especially short-term capital towards US-based stocks and the US markets, because at this point in time, they might be looking at the US as a safe investment destination, given the uncertainties and volatilities in West Asia. Of course, the ripple effects of the West Asia crisis are being felt all over the globe, but it does signal a flight of capital to safer markets, and the U.S. really positioning itself as that safe market at this point. And I do think that once we have certain direction, policy direction, from global cues and also from the G7. Investors will see more calm on the West Asia situation, but it might take a few weeks for the G7 to really define their policy direction in light of the new tensions.
And that being said, defense stocks have run up globally. Is there more room for these stocks to rise given the global political situation?
See, I think at this point in time, if we look at the fundamentals, if we look at the fundamental story, we can assume that the overall supply of oil in the global markets, coming especially from certain countries like Iran, is going to reduce in not only the short term, but possibly in the medium term. So what you're seeing is what we in the economics profession call a structural shift in the real oil markets. Now, when this sort of a strong shift occurs, this is not a shift based on, investor sentiments. This is an actual structural shift. And in this case, the investors will revise their expectations and their real valuation of not only stocks, but also of the commodities. So therefore, I do think that there can be shifts in that direction in the Brent stock index.
All right, let's shift our focus to Indian stock markets. Now, do you think China's stimulus measures mean a cap on upsides for Indian stocks?
I personally don't think so. I think that the Indian stock market moves in a very different direction, and it moves in a very domestically motivated direction even now. When we look at Indian stocks, the real driver, from a real economic sense, comes from fiscal policy direction that the Indian government sets, comes from monetary policy direction that the Reserve Bank sets, and then apart from that, from a global point of view, it's US and European markets, but particularly the US market, that has an outsized impact on the direction of Indian stocks. And the reason for that is that if we still look at a lot of the foreign direct investment and the FII activity, foreign investor activity, that's still directed from the US and from European markets. China still happens to be not a very big investor overall in the Indian equity markets. So I don't particularly see the measures that are being taken in China to have that kind of an impact on the stock market in the short term.
All right, that was Mithali Nikor, an economist joining us from New Delhi. Thank you so much for joining us and giving your insights.